President Donald Trump's tariffs have spooked investors with fears of an economic downturn, driving a stock market sell-off that has wiped out $4 trillion from the S&P 500's peak last month when Wall Street was cheering much of Trump's agenda. A barrage of new Trump policies has increased uncertainty for businesses, consumers and investors, notably back and forth tariff moves against major trading partners like Canada, Mexico and China. The stock market sell-off deepened on Monday. The benchmark S&P 500 fell 2.7%, its biggest daily drop of the year. The Nasdaq Composite slid 4%, its largest one-day decline since September 2022. The S&P 500 on Monday closed down 8.6% from its February 19 record high, shedding over $4 trillion in market value since then and nearing a 10% decline that would represent a correction for the index. The tech-heavy Nasdaq ended Thursday down more than 10% from its December high. Trump over the weekend declined to predict whether the U.S. could face a recession as investors worried about the impact of his trade policy. Beyond the tariff uncertainty, investors are watching to see if lawmakers can pass a funding bill to avert a partial federal government shutdown, while a crucial report on inflation looms on Wednesday. The percentage of total corporate equities and mutual fund shares that are owned by the bottom 50% of the U.S. population, ranked by wealth, stands at about 1%, while the same measure for the top 10% of the population by wealth stood at 87%, according to Federal Reserve Bank of St. Louis data as of July 2024. The S&P 500 tallied back-to-back gains of over 20% in 2023 and 2024, led by mega-cap technology and tech-related stocks such as Nvidia and Tesla that have struggled so far in 2025, dragging major indexes down with them. Those tech and mega-cap stocks that had propelled the market higher the past 2 years were hit hard on Monday. The S&P 500's technology sector dropped 4.3%, while Apple and Nvidia both fell about 5% and Tesla tumbled 15%.
Markets continue to sell off in the wake of additional and continued uncertainty around what the Trump tariff situation is going to look like. We have a lot of different numbers and a lot of different trading partners that keep coming up in the news. And we're kind of waiting to see where things land today, the next hour, the next week. And market participants hate uncertainty. And there's a lot of uncertainty around this right now. I think the speed with which the market is reassessing probabilities around recession is directly linked with the two things. One, uncertainty around tariffs and what the impact may have on inflation and just the general economic outlook. And then two, there's a bit of a growth scare that's going on at the same time. If you look at GDP growth in the fourth quarter, which was 2.5% plus, right now, GDP now, which is kind of a real cast, a nowcast forecast, it's not a forecast, it's a nowcast existing of what's happening in the economy. That number is like a negative 2.5% right now. And so those two things compounded by consumer sentiment, which is just really bad right now, those things are adding up to this moment of volatility in the market.